what you should look for from your general partners is determine who is handling the insurance. And if you're able to get what they're going to bind prior to the closing of the property, if you're able to get the quote, do an analysis, understand what the square footage is of the property, and make sure that they're insuring it to value. Really dive into the exclusions and ask some questions about it.
Are you a real estate investor looking to break into the multifamily investing space? Have you heard of MFIN Con happening in Charlotte, North Carolina, June 23rd through the 25th? The Multifamily Investor Nation Convention is a place to learn from over 60 plus high-level apartment investors and also to network with over 700 investors. If that's not enough for you, Shaquille O'Neal, Barbara Cochran, and Jocko Willink will be live and in person speaking at this event. Be sure to secure your tickets to this live in-person event as the tickets are going fast. You can even upgrade your ticket to the VIP to have the opportunity to rub shoulders with these high-level speakers, including myself. After their session, Jocko Willink will also be attending the VIP party on Friday night at the event. So go to mfincon.com to find out more details. There's also sponsorship opportunities available too. For details for this event and to purchase tickets, visit mfincon.com. Use promo code LIFEBRIDGE to get $200 off your tickets. That's mfincon.com. As a passive investor, do you know what questions you should be asking the general partnership or the operator, the sponsor, all those terms, right? The guy that's leading the deal, that team, do you know what questions to ask them about the type of insurance that they have? I bet that you are trying to mitigate your risk as much as possible when you're handing that operator or wiring it, 50 to 100,000, 250,000, whatever it may be, your hard-earned money. You want to mitigate that risk as much as possible. And one way you're going to do that is ensuring that the operator has the proper insurance, right? But man, some of those things about insurance can seem so complicated, right? Our guest today is going to help you, the passive investor, to understand what questions you should be asking your operator or their team to ensure that they have proper insurance in protecting your investment. Our guest is Brian Mitchell. He's been involved in real estate investing for about 4 years. As he started with 5 units in 2018. He handled the property management for a couple of years and since purchased more multifamily assets personally. But he's traveling to masterminds and real estate conferences, but he is a insurance advisor. I mean, he knows insurance very well. And so he's going to help you today to be better prepared as a passive investor to ensure that this team that you trust has a proper insurance. Brian, welcome to the show. You have an expertise that we all need on our team, to say the least. This is so important. Whether you're on the active side or the passive side, you need to be knowledgeable about this part of the business. And so, Brian, welcome to the show. Get us started a little bit about your expertise in the insurance field, kind of what you are doing. And then I want us to help advise, some active investors, but also the passive investors in how they should look at this part of the business when they are looking at a deal, but also as a passive when they're talking to the general partnership or the operator as well, questions they should be asking. But so who are you? Give us a little more detail.
Yeah, Whitney. Hey, thanks for having me. Excited to be here and talk to you and hopefully provide some value to your audience. I'm Brian Mitchell. I'm an insurance broker up in Maine. We're licensed in all the states, and we write coverages for some real estate syndicators and investors all throughout the country. I'm an active investor on a small portfolio up here, as well as a limited partner on 2 deals, one in Georgia and one in Alabama. So I'm hitting my 12th year in the insurance business, and insurance can be a topic that would bore a lot of people, but I think if you can hang with us, you'll get some good tidbits. And I come from the investor's side, which I think is important because I can really see, what the risks are sitting in my seat right now, owning and managing my own portfolio, as well as being an investor, was a limited partner. And I guess from the LP side, what you should look for from your general partners is determine who is handling the insurance. And if you're able to get what they're going to bind prior to the closing of the property, if you're able to get the quote, do an analysis, understand what the square footage is of the property, and make sure that they're insuring it to value. Really dive into the exclusions and ask some questions about it, because you're a limited partner and you deserve to know what exclusions exist in the event there is a loss. Because if there's a loss, it's probably going to come back to your return or lack thereof, to help cover those costs. So understand what they're about to put in place, make sure the values are insured properly, because we're looking at a market right now that is very interesting. We're in an inflationary period, and we have been for some time. So the costs to reconstruct these days are a lot higher than what it was 2 years ago. The cost of materials, COVID-related disruptions, labor shortages, fuel increases, all that is pushing up the cost to rebuild. So at the very minimum, make sure that the properties are being insured to full replacement cost value, and look at the exclusions and talk to your independent agent if you have any questions about how to interpret said exclusions.
Incredible. Well, we could about just stop right there. That's some great, right there. I was just trying to get as many notes as I can. I was thinking, as an LP, I've invested, passively in obviously a majority of almost all of our deals, or all of them, I think, and then other operators as well. Asking for the insurance, I don't typically get probably enough detail around what kind of insurance they have on a project, when I am investing passively. And we deal with that as an operator myself. And so I do understand some of that, but I've not asked for that every time, but I should. But I was thinking about, determine who's handling the insurance, get the insurance quote, hopefully before closing, and then make sure they're insuring to value, right? And what exclusions exist, make sure values are insured properly. And you said to full replacement value. But something that I even heard recently as well, it's like, even for like your home insurance and those things, as much as values have gone up, not so much the value of the property, but like what you said there, like the replacement value. Well, to build your home is going to cost a lot more today than it did 2 years ago, much less 10 years ago, maybe when your home was built, or 20 years ago. And so, it's like calling your insurance company and like talking that through a little bit, right? Okay, we may have had replacement costs 3 years ago, but that's not replacement costs today, right? And so speak to the passive investor, the LP that's thinking, well, I may get that quote, but I don't really know what I'm looking at, especially when we think about the exclusions that exist or the replacement value. Well, how do I know those things to look for, or maybe good questions to ask around those two things?
Yeah, just understanding a little bit about the property that you're about to invest in. Go to the town assessor page and pull up what the square footages are of the buildings you're about to invest in, and then take a look at the insurance amount baked into the declaration section of the policy or the soon-to-be policy. So it would be the quote, and just try to find out what your cost per square foot is. And depending on the market, in the Southeast, we're looking at about $135 to $150 a square foot. Up here in Maine, you can rebuild very little for under $200 a square foot. So depending on your market, engage with a broker that has experience in, writing in multiple states. If you have questions, certainly, as we all know, the benefit of being a limited partner is that it is hands-off, but it can be as hands-off as you want. I just think that you would be doing yourself a good service by just taking a look at what they're about to put in place, and because it obviously needs to protect you as an investor as well. And also, I'm a value-add investor, as are quite a few people probably listening right now. And depending on the value-add project, if it's high vacancy situation or heavy lift, where days after closing, there'll be a full construction team and renovating units, maybe kicking out some bad tenants and renovating those units, that will typically be an asset that's better suited for surplus lines carriers or E&S markets. So those carriers are fantastic carriers to use in the event that you cannot get a standard company to write the insurance for the project, at least the day of closing. And typically what I'm seeing some investors do is they're utilizing these E&S carriers to get coverage at the onset, but not looking at a standard market once the project is complete and the asset is put to its intended use and you're fully occupied. So the benefit of going to a standard market is the pricing is going to be a lot better than the non-standard world. There are going to be far less exclusions, and then there'll be some billing incentives where you can take advantage of a direct bill with the standard carrier versus a non-standard or E&S market. You got to write a check out. One check out, it's an annual pay or premium finance it, which carries a pretty high interest rate. So value-added investors, my suggestion would be to get that project completed. And once you do that, look to other carriers because there could be some savings there and most certainly a better product for you.
Yeah, no, it's awesome. What about, Brian, what you see happening in the market moving forward? Is anything that maybe the active operator or even the LP should be thinking about? I know we've talked about a little bit of that, but anything else as far as any predictions that you have moving forward or anything we should be prepared for on the insurance front?
Yeah, that's a great question. I mean, prepare for more increases. We're in this hard market that we've been in since Q4 2019. Catastrophic losses nationally and internationally have really pushed rates up for just about every carrier in every line of business. The cost to rebuild is manually pushing rates up because carriers are doing their own in-house replacement cost estimates. So they're no longer relying on old data that was in place when a policy was bound, say in 2017 or 2014. Your inflation guard is going to bump up your property coverage 2, 4, 6, 8% a year, depending on what's in the policy, what the declaration page spells out for, an inflation guard limit. So this hard market, no signs of slowing down. I think once things start getting under control from a loss perspective in this inflationary environment sort of dies down a little bit, maybe we can see some potentially flatter or lower rates coming to us. But we're coming off a soft market, at least since I've been in the business in 2010 up to 2019 when it turned to a hard market. So no predictions yet as to when things are going to change again, but I know we'll all be looking forward to that.
Yeah, no doubt about it. And so, appreciate that because everybody's wanting to know like what's coming, right? Or how do we prepare for what's coming? All those things. Before we move on, is there anything else as you're even investing passively that you're asking an operator about the insurance that maybe we haven't talked about already?
Yeah, I mean, business interruption coverage is a big one. And I see a couple policies here and there that come across my desk that I'm competing on that don't have the correct business interruption limit, or maybe they don't have it at all. So in the event of, say, a fire loss to your asset, tenants are going to be displaced because they can no longer live there during this period of restoration. So typically 72 hours after the loss, that's your deductible in business interruption, by the way. It's not a monetary deductible like it is in standard property coverages. It's an hourly deductible. In 72 hours is a common deductible. So 3 days after the loss, coverage will begin where tenants are displaced. You are no longer receiving the rental income that you otherwise would receive had no loss occurred. That coverage will stay into place up to the policy limit or the period or at the point the period of restoration is over with and the building is tenanted again, whichever comes first. So making sure you have proper business interruption limits are huge. It's huge for the general partners and limited partners.
How would we know what that limit should be?
You would take a look at your gross rents, and then you would back out costs that you wouldn't be continuing after a loss, like cleaning expenses, maybe certain landscaping expenses if those are discontinuing. So you back out those types of costs that would otherwise be there had no loss occurred. And that will get you a pretty good business interruption limit. It's
good to know. I was just thinking about, as a passive investor, knowing a few of these things to ask about. And I think it's going to show you a lot about your operator as well, or whoever. And I would also tell the LP that not everyone on the team that you might talk to is going to be this knowledgeable about insurance, right? There's going to be somebody on the team that's in charge of making sure all these things are done properly. But, like even on our team, we have somebody that handles the insurance relationships, right? We have somebody that knows that part of the business in depth and is ensuring these things are done properly. So they may talk to the investor relations person and that person may not know all of these things about every one of our deals, about the insurance specifically, but we'll be able to get you that information, of course. So All right, Brian. What about anything else? Or no, I asked you that, but I wanted to just kind of flesh that out even more as far as passive investing, but even for the operator, anything else that they should be looking at right now as they're looking at deals, or maybe specific markets, or I know you said you said prepare for more increases, no doubt about it. But maybe you can even help us there to think about, what should we be preparing for, or even 2 years from now, or, as we're scaling out our underwriting, to 3 to 5 years or even more, how do we plan for more increases, or to expect those and to be as accurate as possible?
Yeah. Back in a couple of years ago, I think we could put $500 a door for insurance or $400 a door. And no matter what market you were in, as long as it wasn't, right on the coast, it was pretty good number to use. But nowadays, wow, there are, $800 a door Class A, brand new construction deals that are, being bound right now in Dallas, Texas, and other large markets that are, certainly well protected from with fire departments and fire hydrants and sprinkler systems and all of that. So always figure a larger cost per door amount on your insurance, at least initially while you're doing the napkin underwriting, and engage with an insurance professional that has the markets. Some of the smaller agencies may be really, really good to work with on your local hometown assets, where they have local mutuals that some of the larger agencies just don't have access to. But if you're investing outside of your market, specifically in different states, I would have an insurance professional on your side who has access to those markets, who is licensed in all the states. That will suit you and your team very well. You could certainly use your guy on local stuff and maybe pick his or her own brain on, a deal that you got going on a few states over to see if they can help. But, make sure you're always utilizing somebody with some capacity and experience in writing large property risks.
All right, Brian, that's very helpful. Very helpful. I think, you've just helped the active investor and the passive investor in many ways today. A few final questions. What are some of the most important metrics that you track?
Cost per door is big, because when I get a call from an investor who I've worked with a number of times, in their underwriting a deal, often the largest line item is going to be what is the insurance cost? And a lot of investors break it down by cost per door. So developing cost per doors in all the markets that we write in, and maybe markets that we're not writing in, but my investors are looking at, is huge. So I'm usually able to get a cost per door estimate off to my investors same day. And then obviously we'll have to underwrite it. But there are a lot of variables when it comes to underwriting. We got to look at what the wiring situation is. If this was pre-1975, there's a lot of concern the carriers have related to aluminum wiring. We just bound a deal in January in Mobile, deal I actually invested as well, it was 34 units with $55,000 insurance price tag because of the wiring. The wiring got remediated, and we were able to cut the insurance in half by going to a different market. So try to get your insurance agent, a real sort of high level as to what you know of the property, and they should be able to get you a good cost per door estimate, at least from the start. But as we all know, it has to be underwritten. We got to look under the hood and see what's there.
Of course. What are some daily habits that you are disciplined about that have produced the highest return?
Exercise. And that's something that I've taken more seriously as I get to my mid to late 30s. And it's a beautiful thing. Intermittent fasting, something I started sort of part-time a couple of years ago, which you can't really do it part-time. So right now, I'm taking it more seriously, stop eating around 6 o'clock at night, begin eating again at 11:30 noon the next day. The mental clarity is wonderful. The ability to get out of the house and not have to worry about eating anything is huge. You just get the kids ready or you're off to school. Reading more and allocating more time to podcasts and meeting people and just becoming comfortable by being uncomfortable. Getting in front of people, talking in front of people, all the things that most of us really don't like to do, especially if you rate as a slight introvert. Get out of your shell and just do it. It's not that hard. And there's a lot of value to be had.
Yeah, that's incredible. I could relate to almost all those things you just said. The exercise and the intermittent fasting, we've experienced a lot of good things from both of those things, but fasting is more of a newer thing for me personally, but it's been good. What about the number one thing that's contributed to your success?
Number one thing, I think is consistency. I have this fear of just being average and just, being locked into what we're all programmed to be locked into, which is get out of high school, go to college, work till you're 70, save, rely on the market. I like side hustles. I enjoy it. I get a lot from it. The investing side of thing is not easy. I had to put fire doors in a 4-unit that cost $8,000. And now we just put $10,000 in fire escape balconies on a building that was built in 1890. And there's never been a history of fire. And I'm thinking, if the insurance company doesn't require this and they're paying millions of dollars or they have millions of dollars of coverage on this building, why is the fire department requiring it? So it's trying to break the mold and not be average and not allow stuff like that to keep you from growing. And I think that's important because a lot of people can be dissuaded by doing more than they sort of quote unquote have to be successful because of the red tape, because of the village review board meetings and all the things that you have to do and, taking on the risks and maybe the risks of being sued for not doing something properly I think you got to push all that aside, develop a really good risk management program with your insurance agent and just enjoy the hustle and enjoy the journey.
How do you like to give back?
It's important for us to give back through our time. Our kids' school has a lot of initiatives in helping the community and donations and stuff like that. So we like to partake and do as much as we possibly can through the church, as well as some monetary donations as much as we possibly can. So sort of relying on, what their calendar of giving is in a particular month. We definitely like to jump on to as much as we possibly can and help the community.
Awesome. Brian, I'm grateful to have had you on the show and really to dive into some of the details around even what passive investors should be asking operators about insurance. I think that's very helpful as you are moving forward. You're committing, your hard-earned money, to this operator, trusting their expertise, and insurance is such a big part of the deal and just minimizing a risk, right? And so it's so important. And so I think you provided some great value, especially for the passive investors around that front. And so how can people get in touch with you and learn more about you?
Yeah, feel free to shoot me an email, Brian, BRIAN.Mitchell @crossagency.com. That's CROSS agency.com. Happy to help, happy to talk real estate, happy to talk insurance. I'm on LinkedIn as well, on Facebook, Instagram. I'm trying to get a little bit more comfortable with. I haven't gotten there yet. So yeah, look me up. Let's chat. I'm involved in a few meetup groups and perhaps, some of the meetup groups that you guys are a part of, I'm already in. So, going to be in the Jake and Gino conference in November, doing a couple other conferences before then. So out and about for sure.
Thank you for being a loyal listener of the show. Please subscribe and share it with your friends. We want to help you become the passive investor you've always wanted to become, but also the operator you've always wanted to become. We want to be the number one resource for your real estate investing journey. But go to lifebridgecapital.com where you can start investing in real estate today.